Ladies and gentlemen, good day and welcome to the Canterville Retail India Limited Q2 and H1 FY-2024 conference call. As a reminder, all participant clients will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note this call is being recorded. Before we begin, a brief disclaimer. The presentation which Canterville Retail India Limited has uploaded on the stock exchange and their website, including the discussions during this call, contains or may contain certain forward-looking statements concerning Canterville Retail India Limited's business prospects and profitability, which are subject to several risks and uncertainties, and the actual result could materially differ from those in such forward-looking statements. I now hand the conference over to Mr. Vijay Bansal, CMD from Canterville Retail India Limited. Thank you and over to you, sir.
Good afternoon. On behalf of Canterville Retail India Limited, I welcome everyone to the Q2 and half year 24 earnings conference call of the company. Joining me on this call is Mr. Deepak Bansal, Whole-Time Director, Mr. Basant Goyal, Whole-Time Director, Mr. Surendra Nigam, CFO, Mrs. Poonam Chahal, CS, and Marathon Capital, our Investor Relation Advisor. I hope everyone had an opportunity to look at our results. The presentation and result release have been uploaded on the stock exchange and our company website. The business demonstrated a stable performance in Q2, recorded sale of 135 crore and a EBITDA of 29.6 crore, despite a subdued demand environment across various markets. During our last call, we have guided that we have anticipated growth in sales with the onset of festive season, propelling the company growth trajectory further in the second half. We are seeing good demand traction with the of festive season and believe that the demand trend should continue and improve further during the remaining festive season, followed by wedding season and winter. The company continued to expand the retail footprint and accelerated its store expansion strategy by opening 35 stores during the first half of the year and remain focused on pursuing our long-term strategic agenda with a positive outlook on the growth prospects of both the Indian economy and the fashion apparel sector. I now hand over the call to Mr. Surendra Nigam for giving update on the performance of the quarter. Thank you.
Thank you, sir, and a warm welcome to everyone. So coming to the financials, standalone performance highlights for Q2 FY24. Revenue from operations for Q2 FY24 grew by 16% to 135 crore as compared to 116 crore in Q2 FY23. EBITDA for Q2 FY24 stood at rupees 29.6 crore as compared to 31 crore in Q2 FY23. EBITDA margin stands for 21.9%. PBT for the Q2 FY24 stood at rupees 9 crore approximately as compared to 10 crore in Q2 FY23. PBT margin for the company for Q2 FY24 stands 6.5%. PAT for the Q2 FY24 stood at 7.5 crore as compared to 9 crore in Q2 FY23. PAT margin Q2 FY24 stood at rupees 5.5%. Now coming to the standalone performance highlights for H1 FY24. Revenue from operations for the company for H1 FY24 grew to 14% to 247 crore as compared to 217 crore in H1 FY23. EBITDA for H1 FY24 stood at rupees 64 crore as compared to 66.7 crore in H1 FY23, and our EBITDA margin stands for H1 FY24 at 26%. Profit before tax H1 FY24 is 24 crore as compared to 31 crore in YOY last year. PBT margin stands for 9.7%. PAT for the company for half year FY24 stood at rupees 20 crore as compared to 23 crore in H1 FY23, and PAT margin we were able to achieve 8%. So now this, I am opening the floor for question and answer session. Thank you.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Kapil from Nuvama Wealth Research. Please go ahead, sir.
Good afternoon, all of you, and congratulations on the steady set of numbers. So my first question is on the volumes. For this quarter, it is around 15 lakh plus. So, considering the current capacity that we have, would these be peak volumes, or we can even do, say, 20 lakh volumes, say, if Q3 is good going forward?
Kapil, hi Kapil. Your voice is not clear, so I am not being able to clear that question. Exactly, it is for production 15 lakhs to 20 lakhs you are talking about?
The volumes, 15.4 lakh volumes.
You are talking on volume side, right?
Yes.
Can you repeat the question, please?
So, I'm just saying, considering our current capacity of 50 lakh pieces, our volume for this quarter is 15 lakh. So, is that peak volume 15 lakh, or we can even do a 20 lakh plus kind of volumes if Q3 is good?
So overall, the annual we have been able to deliver 15.68 lakhs of volume for this quarter, right? As compared to 13.44 lakhs YOY last year quarter. So going forward, as we explained earlier as well, the overall volume what we have been expecting this year is approximately 60 lakhs because based on our targets, internal targets, and whatever the expansion completely. So yes, the second half is obviously been delivering more in terms of value. So the balance of the quarter, whatever then the 62 lakh would be there, will be coming from the second half itself. 26 lakh as of now we have been able to achieve for the first half.
Okay, and just pertaining to this quarter, would there be a case that there is more of outsourcing, like how we divide 1/3 through in-house, 1/3 through dedicated vendors, and 1/3 through outsourcing? So this outsourcing would have been more this quarter, or it is equally split 1/3 between all the parties?
Correct. So what is happening? Winter is mainly, as we explained earlier, whatever the next is being there, that is we have been producing from FOB base, that is on the trading. So when it comes to the winter season, so obviously when it comes to sweaters, jackets, that is on the FOB side. Internally, suit, coat, blazer, we are producing internally, which is from the existing capacity. So 60 lakh is the overall capacity, out of which for the year as a whole, like trouser and shirt, we are producing inside as well as fabrication as well. So 2/3 we are being controlling through our factory as well as outsourcing it to the fabricator, and the balance is coming from the FOB. So it's a complete mix. So going forward in this season, like suit, coat, blazer is coming from the internal fabrication as well as factory, and when it comes to the knitting material like sweaters, like jacket, that is from the outsourcing.
Okay, got that. And what would have been the split between full price and discounts as percentage of sales for this quarter? Just wanted to understand what would be the discounting that we would have applied for this quarter.
Yeah, are you talking about quarter 2 or quarter 3?
Quarter 2.
Quarter 2 is majorly starts with the end of the season sale. So most of the sale is of the discount nature in this quarter, because from the 1st June only we start with the preview sales, which is 50%. Then we move to the open the sales. Then we move to the buy 2 get 5. And in September we are running a mix offer of buy 2 get 5, and the fresh merchandise also comes in the store where we give the offer of buy 2 get 1 free. So you can expect like 75 to 80% sale is of the garment which are sold on sale of 50% or more, and rest is from the buy two get one free, like only discount comes to be around 35%.
Okay, so usually how is Q2 for Cantabile? Like, it's the similar way which has happened in this quarter, or in this particular Q2 FY24 there has been more of discounting, considering the demand environment?
Yes, there was a pressure on demand since the beginning of this financial year. So we have to give more discount in the quarter two compared to last year quarter two to prevent the stock pile up. That's why the discount is been given more to the customers. And for the same reason, there is slightly decrease in the gross margins also.
Okay. And would same-store sales growth has been negative for us this quarter also?
Yeah, it's very marginally negative. In quarter one, the same-store sales growth was negative by -7%, and in this quarter, it's negative by just 1%.
Okay. Thank you. Thank you so much for answering all questions. I'll come back in the question to the further questions. Thank you.
Thank you. Participants who wish to ask questions may type star and 1 on their touchtone phone. The next question is from the line of Mr. Malap, an individual investor. Please go ahead, sir.
Sir, congratulations on the rise in revenue in spite challenging environment. But I understand you just mentioned about the higher discounts you provided. But how do we see the margin settling up for the coming the entire financial year end and even for the forthcoming financial year? If you can give some guidance around the margins, that would help.
So, if you have noticed in our earlier comments as well, so overall target for the companies are same. Last year, like we earned approximately 56% of the margin. So we knew since our e-commerce sales will grow, which has been grown in a very well manner. Last quarter, last year, first half we did 3 crore. As again, this year we did 13 crore. So obviously margin would be subdued. So 1% effect is being there, and 1% as people just explained being there. But overall annual margin, what the target we have is 55%. That's the internal target, and we are absolutely on track of that. Maybe plus minus 1% or a half percent is a different scenario. But overall targets are same.
Are the EBITDA levels as well?
EBITDA level targets internally set, but definitely some EBITDA level because of the challenges in the market for the first half, you can say. So we are expecting little bit 1 or 2% downside. But overall, on a larger perspective, it would be same. 1 or 2% you can say EBITDA and PAT margin may be subdued.
Okay, sir. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Mr. Ankit Babel from Subhkam Ventures. Please go ahead, sir.
Yes, good afternoon. Sir, you did mention that due to higher discounting, your gross margins were lower this quarter, right?
Yeah. There is a 1% effect of discount as well, yeah.
But your gross margins are down by somewhere around 400 basis points, 4%.
No, last year. So, as I told earlier as well, if you are directly taking it from from P&L, so there is some elements have been there in other rates. So there is the exact down is approximately 2.25% in gross margin. Last year we will be able to achieve 60.7%. This year for the first half I am talking about, we have been able to achieve approximately 58.4%. So that's the 2 to 2.25%. So obviously 1 to 1.25% because of the increase in e-commerce sales, and 1% is because of additional discounts.
Okay, I was asking mainly from Q2 perspective where it is down by 4%. So out of this 4%, how much would be from higher discounting?
So for the I just mentioned about the half year number. As far as Q2 is number is being there. So because in Q2 there was a festive season being started, so e-commerce sales would be high. So that is also approximately 50% for both. It's the same thing.
So sir, how has been the October month? I mean, since there has been a shift in the season this time, so whatever was the pressure in the month of August, September, has October offset a major part of it, or how is the traction in the October month, and what are your expectations for the quarter? quarter three?
Yes, this October, like, it's quite different from the last October, because in last October there was a Diwali season, and in this year we have a Diwali in November. So it will not be apple to apple comparison, but yes, Durga Puja sales in the East are good. So we are expecting that the same trend will follow for the Diwali season as well. So only thing that can be compared this October is the Durga Puja sales, the eastern region sales of the India. So there the traction is good.
Sir, as per your Ind AS numbers which you have reported in the presentation, your last year EBITDA margins was around 19%, and in the first half it has come down to 12.7%. So, for the full year, what kind of pre-Ind AS EBITDA margins you are expecting? Please.
As I just mentioned, we were expecting approximately EBITDA margin. There would be since the same store growth first 4 months till July was a challenge. So approximately we have been expecting in the same number, 1 or 2% down from as compared to the last year. So last year was approximately 19% pre-Ind AS number, 17 to in between. It is too early to ask. 17-18% we have been expecting in terms of EBITDA margin. Pre-Ind AS number I'm talking about.
Okay, but your long-term goal still would be...
Yes, absolutely. Ankit, there is no change in our long-term vision, long-term goals. Strategy is being same. Slightly market is so a quarter-on-quarter basis, somewhere up and down should be there in the quarter. But overall, on a larger perspective, from the company side, for a longer vision, the targets are same.
Okay, and have you scaled down your expansion plans, or you stick to, your full year store expansion plans?
Sir, there is no cut. These are the little bit of quarterly turbulence. So there is no cut, there is no revision in plans. We are whatever the committed, same expansion is being done. And when the third quarter results would become, we will see that store addition numbers as well. A good number.
Okay. That's it, sir. Thank you so much.
Thanks.
Thank you. Before we take the next question, we would like to remind the participants that you may press star and 1 to ask a question. The next question is from the line of Srijana from Ratnatraya Capital. Please go ahead.
Hi, thank you for the opportunity. So my questions are also on the gross margin side. Surendra, you mentioned that because of higher discounting, partly gross margins are on the lower side. So, but if we see in terms of realization per piece, that has not gone down, right, on a year-on-year basis. So unless there is a mix change, so what would explain that?
So what will you say? Additional discount does not mean that we have changed our scheme or giving additional discount. The schemes are same, but due to consumer and subdued demand in the market and other seasons like Shraddh and other things, we just extended little bit of the period of the schemes. That's the case. So it is about the realization per piece and other KPIs are not being disturbed. It is not a very big one. So on a half yearly basis, take 1% my margin bigger. It also the longer period of discount, extension of say 1 week or 2 weeks. So overall numbers in terms of discount and schemes are same.
So expand in terms of discount period, like usually what would be the discount period and which months would it fall into, and this quarter what happened? Can you tell us about that?
Yes, there are like 3 types of offers we are running. Preview sale, then 50% off, then buy to get 5 period. Then there is an period of the flat offers for the suit and blazer category especially. So that offers of the buy to get 5 period is increased, and the flat price offers of the suit and blazers have been increased. So basically the period of the 50% discount has shrunk a little bit, due to which the discount percentage has increased.
Okay. And by how much percentage the discounts have increased? So it's based on period, right? So in terms of average bill value, then it would reflect, like, would that be affected? So this quarter, I think you mentioned in the presentation, it's 4187. So what was it last year?
Last year, the ticket size was 3980, and this quarter it's 4187.
Okay. I'll take this offline. I'm not very clear yet. Just another question was on the e-commerce side. So this quarter, how much was the contribution, like in terms of sales? For half year, it's 13 crores. So how much is it this quarter, e-commerce sales?
basically, the quarter-on-quarter sale was almost the same. In first quarter, we did 6.8 crores, and in the second quarter, we have done 7 crores.
Okay. And last year, what was it? Last year, same quarter?
For 6 months, we have done a total sale of around 3 crores.
Okay. So first 6 months is 3 crores.
Yeah.
Oh, and the same quarter would be around like half of that, so 1.5.
Yeah, it was like 1.65 crores in the same quarter last year.
Okay. And in terms of gross margins, how much is like e-commerce sales lower? So our average gross margin is around 55%. So for e-commerce, roughly in gross margin terms, how much is it lower?
It's around 48% in e-commerce. It's around 8% down, lesser than the offline margin.
Okay, got it. Okay. Thank you for answering my question.
Thanks, Srinivas.
Thank you. The next question is from the line of Mr. Somnath Paul from Relay Investments. Please go ahead.
Hi, sir. Good afternoon. I just had a couple of questions. Sir, one is that I was seeing the presentation, and I think from FY20, we have from around 3.2 lakh square feet, we have gone to 5.3, and you are quite strong in the commentary saying that we are in for expansion. So what gives you that confidence that without stabilizing the existing addition of the stores, you would still want to go for strong expansion? That is the first question. And second would be, which are the apparel brands whom you consider as your peers or some the ones which you are your competition? I'll follow up my questions.
Yeah, the same store stabilization is we think we have achieved, because in the last 2 months from August there was a increase in the same store sales growth, and in the September also the same store sales growth was maintained. It was a break even, neither up nor down. So in the quarter 2, the same store sales growth is down by just 1%. So we have seen there is a stabilization in the same store. So that's why we are up with our expansion plans. And the new stores which we have opened in the last 3 months have performed according to our target. So in the new stores we are not facing the sales challenge. So that's why we are going with the expansion plan. And second question was about the competition. So competition, direct competitor is majorly the Peter England, which directly operates in our category, and the other peers are like not directly competitors, but sometime in the end of season sale, their price come closer to us, like the maybe VH and the LP, whose end of season sale the prices come closer to us. So this is majorly about the competition.
The reason why I was asking about the competition, sir, is few of our competitors, I don't know if they are actually competitors, suppose companies like V-Mart, so they have faced a lot of pressure because of very rapid expansion and unable to control. So I was just trying to, get your thoughts on, do you think we are very much stabilized and moving ahead?
No, I just explained the pyramid, how this works. So V-Mart, V2 comes in the economy category, value brand you can say. Then comes the R category, which is mainly Peter England, Canterbury, which comes in the mid-premium segment. Then comes the premium segment of the LP and VS. Then we move further up, which is the premium luxury brands like the Gant and the Lacoste. Then there is luxury brands obviously like Christian Dior and everything. So Canterbury category is definitely different from the V-Mart and the V2 what we do. So majorly in the mid-premium segment, the dominant players used to be the regional ones. On the Peter England is the only player which is the national ones. So in our category, the competition is not coming from the V2, V-Mart or from the LPVH directly.
Okay. Sir, I will join the queue for further questions. Thank you.
Thanks. Thank you.
Thank you. The next question is from the line of Mr. Yash Bajaj from Lucky Investment Managers Private Limited. Please go ahead, sir.
Hi team. Am I audible?
Yes, you are audible. Thanks.
Congratulations on a good set of numbers in such a tough environment. So I had just one question. We had a significant improvement in inventory this quarter. Is it because of the product mix change because of the festive season, or is it a structural change?
So as we explained last half year, if you say, so obviously on the basis of last year, April, May was very high. We have been predicted little bits on a higher side. So that is why last year half was slightly, higher in terms of inventory, and in fact, I'll not shy in saying that our inventory was slightly higher side. So we controlled completely, we understood the grievance of the inventory, we understood the criticality of the inventory, and immediately our Honorable CMD has taken the action on this, and we have controlled it. So you must have gone through our cash and see against the last year 75 crore we added in 6 months. This year we just what has been required, and all the inventory for the old setup, whatever been there, is being corrected. So now we are in an ideal situation now.
Okay. So just to understand correctly, that inventory was higher relatively. Was it because of the pent-up demand? Because of that, we were carrying higher inventory?
Yes, last year there was a very good sales in the April and the May quarter, so we produced more seeing that sales. So that's why inventory was higher last year. When we see there was subdued demand coming, so we optimized the inventory. We started optimizing the inventory in the last year only. So those effects are clearly visible now. If you check even our work in progress today, it's in a very controlled situation. So optimization of quantity has been done in a really nice manner.
Okay, got it. And my second question is that how are our new recent initiatives which we have taken in terms of shoes and the women's wear, how is that panning out for us?
We are opening ladies and kids exclusive stores. We are opening like one store a month. So we have the recent openings of the ladies and kids store are really going good. And so we have kept our expansion plan the same for the new categories like ladies, kids. And in the athleisure category, we have also planned 5 stores, and they are coming with the budget of like with investment of 5 crores. So it is soon to open. The first footwear athleisure store is going to soon open in the coming week, and we are really hopeful.
That would be purely athleisure store.
It will be a mix of both. It will be a mix of footwear and athleisure.
And shoes, sir?
So footwear is a part of that.
Shoes is a part of footwear only.
Okay. Thank you. All the best.
Thank you.
Before we take the next question, we would like to remind the participants that you may press star and 1 on your touchtone phone to ask a question. The next question is from the line of Mr. Kapil from Nuvama Wealth Research. Please go ahead, sir.
Thank you for the follow-up. Sir, our average revenue per store has been inching up over the years. And now with this focus on footwear and additional focus on women and kids wear, can this number go higher than 1.4, 1.5 here in the coming years? Like, just wanted to know how higher this number can go over the medium term.
So your question is basically whatever the average sale per store, whether it will go up with the addition of women's and kids wear, right? If I'm not mistaken.
Right, and also with footwear.
So overall, what we have been targeting now, overall average. So not only that, the ladies and kids wear have a potential of immediately giving 1.5 crore or 1.6 crore or 1 crore. So overall average, what we have been discussed earlier as well, overall average will go up, which will have obviously volume mix as well as a revenue mix. But specifically by the reason of ladies and kids, it will go on an exceptional basis. That could not happen. Overall, men's category, women's category, and kids category, all whether it's a family store, others will go sequentially. So overall, 1.4 next year, targeting to 1.45. Then it is gradually will go on.
Okay, sure. And for this quarter, our expansion in new cities has been around 246. So, any color on which cities would we have expanded in this particular quarter, and what would be the target on the expansion to the overall number of cities over the medium term?
Yeah, the major expansion has been done in the tier 2 and 3 towns only, and we will be going forward with the same strategy. And if you geographically, we have done major expansion in the western and northern part only. So it is the same plan that we will be going pan-India expansion except south. So number of new cities which will be added is again we have today around 500 stores and we are present in 250 towns. So it's around 2 stores per town, and the same average will be going forward.
Sure. And one final question on the number of stores target. 35 stores opened in H1 and I guess 16 more added in this October month. So would there be any revision on the guidance of 70 stores addition for this year? Because 51 has already been opened.
No, it can go up to 80 stores. So beyond 80, we haven't revised the target. Because sometimes good properties come in large numbers we open, but there are bad months also where the openings get down to like 3 or 4 openings per month. So it will be getting optimized.
And the same target remains for FY-25 as well, right?
Yeah, same. Right.
Okay, great. Thank you so much.
Thank you. Participants who wish to ask questions may press star and 1 on their touchtone phone. The next question is from the line of Mr. Arpan Rathod from Think Invest. Please go ahead, sir.
Good afternoon, sir. I have a couple of questions. First is on the PAT for full year. We've done around 20 crores in first half. Last year we did around 67 crores. So just wanted to understand whether we will be able to reach that number or we will be bettering that number for the full year.
So the same thing what I asked earlier, this will obviously directly linked to revenue, since the same store was slightly on a flatter side till date. So, but overall number for PAT for this financial year as compared to last year would be definitely slightly up. Percentage wise, we can expecting approximately around 11%. That's the case.
Okay, and what would be the next 3-year target growth?
Same thing, same targets has been there. We have been expecting to revenue growth approximately 18 to 20% for the coming financial year. The immediately target is approximately in next 2 to 2.5 financial year we have to reach 1,000 crore with a pre-index EBITDA margin approximately 18-19% and PAT margin approximately 20-20%. So we are absolutely on our earlier targets as well.
Okay. One question on the raw material expense. If I look at YOY, last year raw material as a percentage of my sales was only 23%, which has gone up to 34% in the current quarter, despite the general market trend of flattening of the raw material prices. Just wanted to understand why the 11% jump in raw material expenses.
So we need to understand the overall. There are combination of raw material as well as FOB what we discussed in purchases. So we are arriving our gross margin after considering raw material, WIP and what is being buying on a FOB basis. That is the knitting trading materials, right, or accessories. So overall things including this one costing approximately 45%. So when obviously earlier inventory was slightly there, we bought lesser amount of raw material and WIP, which is Deepak just said we're absolutely in control. So overall target in terms of if you are taking from the balance sheet numbers, raw material, WIP, finished goods purchases as well as job worker which is cutting. That is approximately on a 45% so that we will be able to earn the margin of 55%. So it is around that.
Yeah, actually, the financials which gets reported, you are unable to draw those numbers directly. Might as well if you can consider with the auditor what is permissible. If that number can reflect, I think that questions could be better answered or better understood by people, analysts.
So we can discuss it offline. No issues. What the exact broad numbers I just told you, and offline we can take it the questions for more clarity for you.
Sure. And one last question on the online-offline mix. What is the offline target for the current year and next year?
So, overall target when we are talking about this year, we are taking to our sales. Last year, we will be able to deliver approximately 3% of revenue, total revenue, 2.5% in terms of e-commerce. This year, we are taking it approximately 6 to 8%. And when I'm talking about 1,000 crore, next financial year, we are taking it to 10% approximately for the overall revenue.
Okay. That's it from my side, and all the best for the next half.
Thank you, sir.
Thank you. The next question is from the line of Mr. Somnath Paul from Relay Investments. Please go ahead, sir.
Hello, sir. I think I just want to understand, in the previous call, you mentioned generally for our company, H2 is generally on a higher side because we have more of winter contribution and festive season also. And you also mentioned that sales are a bit pushed out. So can you give some flavor on now that the wedding season is about to start and then there is Diwali and then, other. So how are you seeing, the current quarter compared to same as that of last year? And second is that, sir, I also wanted to understand, other than the stores expansion and I think our manufacturing facilities, so do we have any more capex or other major OPEX plans? Thank you.
So there are two questions. Number one, what is done in the first half and the second half? So as we told, our ticket size is definitely higher on the winter side, so it's approximately 40-60. So last year 40% we did in H1 and 60% approximately we do in the second half. So you can approximate 250 crore approximately we did, which is approximately overall 40% of our annual target as compared to last year. So balance approximately we are expecting 60% of our overall target which come from the second half. Now coming to your question in the capex part, yes, there was an expansion earlier we told. Because when we are talking about 1,000 crore revenue and then to make it to double, so the number of garments what we have been selling it now, it will be multiple to the 4 times. So we need additional space, everything. So already for last 2 balance sheet you must have seen, we have made a capex investment in our new warehousing cum office building. That is near to our existing office, which has been under construction. So there is a capex cost being there, and 50% of those capex cost is coming in the coming financial year and next financial year. So the only larger, apart from expansion of the store, there is a plan to have this warehousing come office facility.
So can you give some idea on the cost that we intend to, expend on this warehousing facility? I mean, the color would be fine. And second is that I also wanted to understand, like you said, Q2 is generally heavier, H2. So how are you seeing the Q3 of this season compared to that of last year? Because like you said, first H1 was a bit of aberration because last year there were higher sales. Because of, and this year there was Shraddh and also. I mean, I was just trying to get some sense on how we are seeing Q3 of this year versus that of last year.
So 2 questions. First question I'll reply. Second, Deepak will take it up about the seasonality sales is coming there. So the capex, 32 crore you have seen in the last year balance sheet, we have been capitalized in terms of land and under construction it is going on. So 40 crore is approximately land and clearance cost which has been done. And current year and going for the next financial year, 45 crore approximately is the cost which is being there in complete building this warehousing term office facilities. Second question is on seasonality and festive demand.
Yeah, your second question is about the growth in the Q3 we are expecting from the last year. So in Q2 we have made around 17 to 18% growth, and in the Q3 we expect growth to be around 20 to 25% we expect from the last year. So it's because we have opened very good number of stores in the past 2 months. So we are really upbeat for Diwali because these are the new stores and the Diwali season is just around the corner. So in the new stores and due to the old stores also picking up now, so we expect good numbers in the Q3.
So one final question. I think we have the best industry metrics compared to our peers and likewise because of your integrated manufacturing as well as branding part. So are we kind of hopeful that once we hit our peak targets of sales, maybe next 2 to 3 years, so our metrics will more or less be the same or at least they can be retained? I mean, how hopeful are you or can you throw some light, please? Thank you.
In terms of production. So yeah, production makes it same. As again, the moment our volume would grow and we are integrated, so 2/3 we have been controlling through our fabrication as well as our own factory, and 1/3 approximately on the basis of procuring from on a FOB and trading value. So that will continue. Obviously, since we have no immediate plan to extend our factory, so my existing 15 lakh capacity will go to 20 lakh pieces, and the balance come from the fabrication. So 60% controlling through fabrication and our own production, and 40%, whatever the number is going further, will be controlled by, taken from the FOB. So that's the same thing, approximately 40-60 will be maintained.
So I think your team would best be handled to decide which is the right percentage of manufacturing versus trading. So my understanding was more on the overall metrics, right? On the ROE and the return on capital employed. So you think when we hit the peak sales, we should have same or similar kind of metrics, what we are running as of now?
Yeah, I think the same metrics will be good because this is the best combination we have achieved, one third. So in the future also we would like to maintain the same metrics. And it will be a support in overall also, because if any one thing is disturbed, then it doesn't disturb the other two. So a company shouldn't depend upon the one thing majorly. It should be equally distributed. So I think this is the best strategy.
And so one final question before I come back. So you mentioned on the e-commerce we have a little bit, at least 3 to 4% of less gross margin. So any particular reason why we are focusing still on that? Is it more just on the sales target, or do you want to build an online good presence as well in addition to your physical stores?
No, the online sales is majorly about selling the leftover inventories, and due to the same reason, the gross margins are less in the online space. But it is the same with everyone. Most of the brands are clearing their leftover inventory in the online space, and it is a very good platform to clear the leftover inventory. So
just one suggestion here. I think on basis of a bit of a social background check, I found that there are a lot of complaints. So probably it is just a suggestion that if you could ask your team also to look at the returns or the kind, like you mentioned, it's basically the leftover inventory which are not sold. So that's all from my side. Thank you.
Thank you. Participants who wish to ask questions may press star and 1. The next question is from the line of Mr. Yash Bajaj from Lucky Investment Managers Private Limited. Please go ahead, sir.
Hi. Thanks for the follow-up. So, sir, you had mentioned that currently in the segment which we compete in, there's only Peter England, international players, and rest are local players.
Yeah.
So I wanted to understand so today the competitive landscape is like you mentioned. So suppose 7-8 years back, was there more competition in this segment where we are currently? That's my first question.
7 to 8 years means you are talking about 2015. In 2015,
just broadly, I mean, is there any change in competitive landscape in this price point which we are in?
Yeah, we are seeing the changes in this landscape. In 2015, competition was less. Yes, but if you go further back, like in 2009-10, then competition was more because there were more brands in the mid-premium segment. By 2015, more of the brands are gone. But in the last 1 to 2 years, there have been some increase in the competition to local players.
Okay. And when you talk about local players, what would be the general size of these, suppose, top 3-4 players?
These are normally small in size, around 100 crore turnover.
Okay. So are they expanding, or they are where they are? How is it like?
I don't see them as a big challenge because they are mostly operating through the franchisee stores. And in the case of the franchisee, their per store average is very less. Then mostly stores are doing 50 lakhs per store average, and we are doing around 140 lakhs. So until and unless they change themselves in a very big way, we don't see themselves as a bigger challenge in future.
Okay. And yeah, sorry, just a follow-up on this. So the local players, like you mentioned, these guys, they have their own manufacturing and they franchise it, or how is it like? Or they have built a brand? How is it?
Most of their sourcing is outsourcing. They don't have their manufacturing, and most of their stores are the franchisee stores, FOFO stores.
Okay. Thanks a lot.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Deepak Bansal for closing comments.
I would like to once again thank you all for joining us on this call today. We hope we have been able to answer your queries. Please feel free to reach out to our CFO or IR team for any clarification or feedback. Thank you all.
Thank you, sir. On behalf of Canterville Retail India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.